Forget every lagging moving average video you've seen. I'm combining 4 hidden settings inside a free TradingView indicator to eliminate lag and massively boost accuracy. And here's the kicker. 90% of traders are making a single mistake, the profit killer that can wipe out your gains no matter how perfect your setup looks. Stick around because I'll show you exactly how to fix it and keep this strategy profitable. Alright, let's build the zero lag moving average system. We need 4 moving averages. Don't worry if you're on the free version of TradingView. Just go to the indicator section at the top in the search tab, type in 10 and 1 different moving averages. Hit enter and add this one I'm selecting. When it loads, you'll see a single line, a default 200 EMA. We need to turn this into a zero lagging engine. Double click on it and the input section. There are 10 slots for moving averages. First, enable MA1. Then set it to EMA. After that, change the period to 21 and set the source to high. This gives us a more immediate overhead resistance. Think of it as the ceiling the price has to break to continue an uptrend. Now enable MA2. Set it to EMA. Change the period to 21 and set the source to close. This is the true mean price, the center line that tells us the real market balance between buyers and sellers. Now enable MA3. Set it to EMA, change the period to 21, set the source this time to low. This defines our floor of support where price usually finds a base before bouncing back. Now color all 3 blue. Scroll down, enable MA6. Set it to SMA, change the period to 200 and set the source to close. Now color it to yellow. This is the trend anchor, the big picture trend line that tells us the direction of the market. Thicken the lines so they stand out clearly on your screen. Now look at the chart. 4 lines, yellow 200 SMA, lower blue EMA using low, middle blue EMA using close, upper blue EMA using high. The 3 blue EMAs form the ribbon. The yellow SMA is the trend anchor. But don't jump ahead. Even though this looks simple, this is where most traders fail. You might think you know how to trade this setup, but 99% of people using these lines still lose money. They miss the one specific price action confirmation signal that makes the system truly profitable. I'm saving that secret for the chart examples because it's the key to making this strategy work. So, first, understand what the ribbon and the trend anchor are telling us. The yellow 200 SMA, the trend anchor, shows the major trend. Priced above it, the major trend is up. Below, major trend is down. The ribbon shows the minor trend. Priced above it, the minor trend is up. Below, minor trend is down. So when both major and minor trends point up, momentum is strong. If major's up, minor is down, that means weak momentum. If both are down, a strong bearish momentum. And if the minor trend rises against a downtrend, it's usually a temporary pullback like you see here. Now here's the important point I want to reinforce. Understanding momentum alone won't make you money. You've seen the ribbon, you've seen the trend anchor, but that's just the framework. The system only becomes profitable when we layer on the secret price action confirmation that 99% of traders don't even know exists. That's coming up in the chart example. Now let's talk buy and sell signals. Remember, trades must align with the major trend. Price above yellow SMA, only consider longs. Below, only shorts. Watch closely. Price is above the trend anchor. Trend is up. Then price action, pull back into the ribbon. Don't matter. The major trend hasn't changed. Price breaks above the ribbon. That's the first hint of continuation. But we don't enter yet. Remember what I told you earlier? Momentum alone isn't enough. The system only works when we apply the secret confirmation signal. You'll see exactly how it filters out all fake outs in just a moment. Keep that in mind because this is the difference between losing setups and real trades that generates profits. Here's the confirmation. An uptrend is defined by higher highs and higher lows. So, we mark the most recent high with a horizontal line. Only if price breaks above the swing high do we enter a long trade. That breakout is the buy trigger. A stop loss goes below the recent swing low, or use the ribbon for your stop loss and target at least 1 to 1.5 risk to reward ratio. I want to give you this confirmation its own dramatic title so you can remember it: the profit filter. Every time you see a valid setup, this is the rule that determines whether you enter. It's the layer that almost no trader is using, and it's why 99% of strategies fail. Why this matter? Price might pull back to the ribbon and even break it, but without this breakout, you escape the trade. This filters out losing setups and keeps your account safe. Imagine entering every trade based on ribbon Phillips alone. You'll get wrecked in sideways market. The profit filter fixed that. Moving on the chart, price drops below SMA, trend Phillips down, then pull back to ribbon. Swing low, trigger, price doesn't break. So no trade, sideways, messy market. System avoids every bad setup. Now, price above SMA, no swing high breakout, no trade. Price below SMA, no swing low breakout, no trade. False signals are filtered. Account stays protected. Finally, clean setup appears. Trend is up, pullback, swing high marked, breakout occurs, buy. Stop loss and risk reward rules apply. Pullback again, swing high marked, breakout, another buy signal. Repeat. Trend flips down, pullback fails. Trend flips back up, valid long trade confirmed. This strategy combines moving averages with real price action. That's why it works. But it's not perfect. Losses will happen. And here's the final piece, the profit killer. Most traders fail not because of bad setups, but because of bad risk management. One mistake, just one, wipes out more account than any wrong indicator, entry, or signal. The video you see on the screen right now is mandatory. Click it to fix the single profit killer mistake before you risk another dollar. Fix it, and every trade you take with zero lagging moving average setup can reach its full potential. Ignore it and you'll be repeating the same losses over and over. Alright, happy trading.